Morning. How are we doing? Got them firmly crossed this morning. Everybody cross your fingers. I've found out what the problem is anyway. How are we all doing? Morning, Danny. Morning, Diamond. Morning, David. Morning, Baggy. Morning, Martin. Morning, Ripping Post. Morning, Al. Steve. Morning, Martin again. Another Martin. Will the stream be cut off today? Place your bets. So basically, yesterday when it disconnected in the New York session, I quickly checked my laptop and my phone, and they're all working absolutely fine. So I've narrowed it down to the router. Wired connection is the problem because the Wi-Fi is absolutely fine. So it's just the wired connection. So therefore, I've identified it must be an issue with the router because I haven't got a switch running. So need them to replace the router. So I'm going to phone them this morning and say, oi, your router's buggered. But I have also connected my PC via Wi-Fi. So if the cable drops, it should flick over straight away to Wi-Fi, except obviously Wi-Fi I'll get about 30 meg, whereas I get 500 meg cabled. So we'll see what happens. Anyway, I'm on. Let's see what happens. Hopefully it works. Morning, Virginia. Morning, Jules. Morning, Neo. Morning, Frederick. Morning, John. Almost thought you were throwing the finger at us. Well, some people I want to. Not in here, obviously. People in social media, love them. Do you have the latest firmware? No idea. That means getting the router out and finding the IP address and everything on the back of it. And I don't speak to Virgin. I'd rather just have a new router. It'd be easier. I'm assuming it would just update the firmware, but anyway, I don't know. Haven't tried that yet. So, quick recap. Yesterday, we had a pretty good day yesterday. Again, 3.74% yesterday or something like that, I think. So this is ADR reversals, banked 1.12 yesterday, 0.18 banked this morning, sitting in 0.11 DD. So we got out the ADR reversal strategy was stuck in something. New Zealand dollar, US dollar, wasn't it? I think, maybe. 15th, 16th, no. What was it stuck in? Oh, maybe it wasn't this one that was stuck in something. Anyway, so yeah, banked 1.12 on ADR reversals yesterday. H1M5 banked 0.64 yesterday. Nothing banked so far this morning, sitting in 0.3. Pound New Zealand looks like it's probably going to bank today. Thanks for the follow, Graham. Welcome aboard. H4 M1 mean reversion. H4 M5 mean reversion banked 1.51% yesterday. Nothing banked today, sitting in 0.84 drawdown. The nothing in drawdown particularly bad there. Just 0.5% on EuroCAD, 3 positions. One of those is in profit, so it is coming back. And H1 mean reversion, H1 hedging, 5% DD at the moment, banked 0.47 yesterday, banked 0.76 this morning. The only thing that is getting a little, well, it's not, I mean, it's just, this euro US dollar, it's just 1%, 3 positions. So it's not a problem. It's just not going anywhere at the moment. CAD Swiss was the only thing that one was struggling with a little bit. That position's working nicely now. So 0.12 on that, that'll probably bank today if the CAD Swiss continues to rally. So if we get this continuation strength on the US dollar and the CAD, we should be out of that one today. So there you go. So pretty good results, 3.7 something% banked yesterday. Let's quickly look at the news before the market opens. So the Australian dollar wage price index came out overnight. That was 0.8%. We were forecasting a 0.9. Previous was 0.8. So it's virtually no difference whatsoever. If you have a quick look at the Aussie pairs, we've got no ADRs basically. So the Aussie had a little drop against the CAD, little drop against the Swiss. New Zealand, bit of a drop against the US, but nothing dramatic. That's ADR. So we're miles away. So there's no news impact from that overnight, which is good. The The only other news we've got today is 10:50 this morning. We've got Bailey speaking. Likely he is going to tell us that the interest rates are going to go up again for the UK. We are expecting another increase before the summer is out, possibly two. If we have a look at the fundamentals on the UK at the moment, we are massively in trouble with inflation still. Inflation is going the wrong way. 10.1 is coming down 0.3. We're expecting it to get below 10 on the last inflation figures. We didn't make it. We only increased by 0.25 instead of 0.5 on our interest rates. This is far too high. That has got to go up, unfortunately. So I'm expecting Bailey today to reiterate the fact that we're going to see an increase on interest rates. So we should expect possibility of a pound rally today, but may not happen. Depends how much the markets have factored it in. So that's the only news we've got today. That's it. Overnight tomorrow morning, we've got unemployment. So you need to just be aware of that for the Australian dollar. And the New Zealand dollar budget is coming out. Budgets don't tend to affect FX, but we've got that coming out. Also, it is a European holiday tomorrow as well. So we're probably going to have a fairly light market in the morning. And the DAX is obviously shut. So don't trade the DAX tomorrow morning. Okay, so that's news that is scheduled. Overnight news. Nothing much came out. The Japanese GDP figures came out as 1.6. Huge increase in GDP. That's the annualized, but the actual came out as a 0.4 instead of a 0.2. So it's a big increase in GDP expectations, which takes the pressure off their interest rates again. So really can't figure out which way the yen is going to go mid or long term. So it's a tricky one. If unemployment rises, the inflation remains sticky, the Fed will face enormous pressure. We know that. You're about to go bankrupt. So be careful with the US. I like shorts on it at the moment. Yeah, it's about the defaults. So nothing else overnight. So yeah, nothing particularly overnight to worry about. Market is about to open. Let's watch the DAX. So we've got 30 seconds to go. DAX today, fairly simple open at the moment on the DAX. There's no gaps to fill at all. Yesterday, we got the gap fill, which was absolutely beautiful. So really simple gap fill yesterday on the DAX. Pop down, straight into yesterday's low, straight up gap fill. Really easy trade. We haven't gone anywhere now for 3 days. We're in day 4. That's where we started on Friday last week. This is where we are, and that's where we've gone. So nothing's moving anywhere. We're stuck inside this bigger range. There's your opening range, pre-market 15. Your 5 is there if you're taking the 5. So we've got multiple ranges at play now on the DAX. So we've got this little range here. As you can see, previous day's high, previous day's low, pretty much within that. Then we've got the weekly range, which is there. Then we've got the 2-weekly range, which is there, which is pretty much the same as where we've been for pretty much the last month. Not going anywhere. Still like it short, still like the gap fill, still waiting for some pressure to come to the downside, but we're just not getting anything. So as far as today goes, from targets, we are down at yesterday's low and the previous day's low. Seem to have a freeze on my Robo Forex again. I'm getting this a lot at the moment. Robo Forex feed sticks. This is what I had. This is why I left Axie. I had a problem with Axie, my previous broker, getting freezes like this. So I switched away because I was just getting too big a swaps overnight, spreads overnight, and too much freezing. So I switched away to Robo Forex. Absolutely fine. And the thing that this is a conspiracy theory. It's probably not true at all. Pretty sure it isn't. As soon as I start making money with a broker and I go onto their B-book, I get problems with my terminal and my data feed. And it's exactly the same as Axie. Axie had me on their books for ages. I got made into a commercial client because I was making money and they were losing money on me. All of a sudden, my feed started suffering. So I just jumped ship. And it's not the first time this has happened. And I'm getting this now with Robo as well. And I'm not really sure there's anything I can do about it. but this is an ECN connection, so there is no real argument for having data freeze. Okay. Anyway, that's my conspiracy theory. You make money, they dumb down your connections and hopefully make you not lose money. What they don't realize is I'm not scalping the 1 minute time frame, so I don't give a monkeys. You can freeze my connection all I like. I only check it every few hours. What the hell? Right, okay, so we got a massive, I'm going to switch over to my Beetle Crest for a second, just so I can actually see what happened to that DAX. Okay, so we spiked down to the downside. So the pre-market 5 and 15, you are short. You've gone short. Depending on your trailer, you might actually be stopped out with a small loss on that, 50%. But that's gone to the downside. So yeah, as I was saying, DAX, this area here is a strong support, which we can't seem to crack at the moment. We've had goes at this now this is day 3. If we do break that, we are short down to ADR today. Last week's low is the only place to stop. So if we do break short and hold short today, this is a really good looking short. Stop above the high ADR target. Don't get out until you get to ADR, because there's no reason why we wouldn't go anywhere but there today. So if we can get that break today, we should see a nice rally to the downside, but we'll see what happens. But watch this for the bit, and then we'll go and have a look at the FX pairs. Just catch up with the chat. Are you 4G or 5G? I'm not any G. I'm cable, fiber. That's why I get 500. If I was on 4G or 5G, I'd be getting like sub 100 meg a second. I'm getting 500. No, actually 350-ish. I know that. Let's have a look. Hyper Optic Limited in London. There you go, 360. Yeah, absolutely nothing wrong with my internet connection at all. Super fast. I don't want to change to a different thing. I just want the thing to work. There's nothing wrong with it. It's just got a problem with the cable connection on the router at the moment. So I will probably do a firmware update. It just means I'm plugging everything and trying to get to the logins for the router and stuff. It's a pain in the arse. Stuck at the moment, sideways. Looks like we're pushing this propulsion gap. So 30 seconds left on this candle. That's your 5-minute OR in. Morning, Stefan. Morning, Tim. Have you moved house yet? No, haven't. No need to move house. Nothing wrong with my broadband. It's the box, which is less than a year old. They sent me a new box as well. The old one was fine. US dollar yen. Have a look at that in a sec. Morning, John. Morning, Stevie. With Japan, there's your 5-minute opening range in. So the opening range break is long. This is a whippy one today. Don't like it when it's lively like this. We tend to see that sort of price action, which isn't good for opening range breakout strategies. Yeah, this is triggered long, taking you short. You're going to take a short on that. But you're going to get a stop out on that long by the looks of things. Looks like it wants to go short today. Just give it another 5 minutes and see where we end up. But looks like a short. Quite a big drop going on. With Japan GDP increasing, why has the Swiss increased against the yen? The Swiss has increased against the yen because the Swiss is probably weak. No, the Swiss is okay at the moment. Don't know. Just because the Swiss franc is stronger than the yen. That's all. That's exactly why things go up and down, yeah? If like the New Zealand dollar yen has gone sideways because these two are in equilibrium, neither is stronger than the other. At the moment, the yen is weaker than the Swiss franc, therefore the Swiss franc's going up. However, the pound is weaker than the Swiss franc. Oh, sorry, the Swiss franc is stronger than the yen, that's why that's gone up. And the pound is weaker than the Swiss franc, which is why that's gone down. It's literally all it is. This is why we use relative strength. We were interested in the relative strength between two currencies to decide which one is likely to have a pullback. That is all how relative strength works. Everything has a strength, basically. So it's just about seeing which one's got is the stronger. If you've got two currencies which are strong at the same time, US dollar CAD's always a good example of this. If they both have good news come out at the same time, US dollar CAD will either go up or down. And that tells you whether or not the US dollar has more money flowing into it or the Canadian dollar has. Literally all FX exchange rates are. Okay, your 5-minute ORB is long. And you are flipped long on your 15-minute pre-market as well. So we are going up. Schizo market this morning. So upside targets, I didn't even look at the upside targets because I was so sure we were going to go for a break to the downside. But your upside targets are yesterday's high and previous day's high. And then again, the same as yesterday, we're looking at ADR, which is these 2 weekly highs. So last week's high, previous week's high, just above yesterday's and previous day's highs. So those are your upside targets. Loads of upside room today for this break. So yeah, see where this goes. Morning Dreska, morning K. On H1 M5, are you using the RSI 21? Yeah. Always use 21. Unless the market is really contracted, and then I might switch back down to a 14. But not very often. Can't you go with an A-book broker? There is no such thing as an A-book broker. Morning, got some talking heads in 10 minutes. Have we? Oh yeah, ECB stuff. Might get a rally off of that. Yeah, we'll see. Eurozone CPI year-on-year finals coming out. We don't pay a lot of attention to the Eurozone CPI. It's more individual France and Germany because those are the two that drive it. So the Eurozone is kind of an amalgamation of France and Germany. Big, nice push to the upside. Yeah, so basically the way that brokers work, okay, is, not K, Whipping Post even. When you start with a broker and you deposit live money with them, they have two books. They have what's called an A book and a B book. All brokers have this. Yeah, there is no such thing as an A book broker or a B book broker. All brokers run two books, and this is their business model. So the A book is basically, different brokers have different terminology for it. One is the other, basically. Check out After Prime, their A book. Don't listen to the lies. They provide receipts. Receipts of what? Executing your trades. It doesn't matter where your trades go. What matters is how they work, basically. So an A-book broker, or a broker, when you're on A-book, basically, let's call the A-book the newbie book. When you join a broker for the first time, they put you into their A-book. And what they do is they take the opposite sides of your trade, right? Regardless of what they tell you, they do this. I know this because I know people in brokers, right? So A-book brokers basically, the A-book and a broker is where they take the opposite side of your trade. Think about how this industry works, right? So if I go to Axie's website, at the top of Axie's website, it says 83.1% of retail investor accounts lose money when trading CFDs. Okay, so I deposit £1,000 with Axie. Based on their statistics, they are guaranteed to make £830 out of me. Why? Because 83.1% of retail investor accounts lose money. So roughly 83% of the money that is deposited with them is lost by retail. So if you can get $1 million coming into your brokerage, 830,000 of that is yours. So why would you farm that out to the dark pools and farm that out to market makers and books to get those executed? Why not just take the opposite side? Because you know they're going to lose. So what happens with everybody that joins a new broker is you go on to the A book or B book, depending which way they do it. Some call it the A book, some call it the B book. It's basically there's two sections. When you start making money, they lose money because they're taking the opposite side of your trade. So as your P&L goes up, their P&L with you goes down. So what they then do is they switch you over to the B book. And the B book, basically, all they do on B book is they farm your orders out to the dark pools and other brokers and market makers to make money. Yeah. And they take a spread on the trade and a commission if they charge commission, depending on the account. Yeah. So this is how they make their money on people that are profitable. in the industry. People that are unprofitable in the industry, they make money by taking the opposite side of your trade. Yeah. Now, there may be brokers out there that don't do the first one. If that's the case, fine. They're the ones that are going to go bankrupt because they don't make enough money, because 83% of customers lose money, right? So let's say you run a business. If you ran a business where every single month, 83% of your customers left because they went bankrupt, you've got to replace those 83% of customers every month, right? To be able to sustain your business. So what they do is they put 50% of all the money they make out of the A-book customers back into marketing, because they know they've got to refill this pot every month. So there's a cycle that goes round forever of traders starting trading, losing their accounts, starting trading, losing their accounts. Your business model as a broker is 83% of your customers are going to leave you every month. You got to find them again. And that's basically how the industry works in a nutshell. If you're a broker. So there you go. If you didn't know that, now you do. Morning, got some talking heads. Yeah, check it after Prime yet. Morning, Kennelly. Their A-book. The MD is passionate about it and has campaigned for it. Trade receipts. Wait for case. Does it really matter? Does it matter who? When I press the button, does it matter? No. I get into a trade. Whether they fill it and lose or make money, I couldn't give a monkey's. Every broker in the universe is an enemy of yours because they charge you a spread, they charge you commission, they spread overnight to steal your money. And I'd love every single one of them, as soon as I start a new account, to take the opposite side of my trade, because I make them an absolute loss. It's brilliant. I don't care. I don't care if they're one of these, we really want to help the traders. I've seen them all before. Been around a long time in this industry. None of them are good boys. They're all bad boys. They're all in it to make money. They have lots of names for us retail traders. I won't tell you what they are. Morning, Blue Trader. Should become a broker. Yeah. Unfortunately, to actually set a brokerage up costs you $250,000 for the licenses. So you've got to have money to make money as a broker. And it's not a good industry to be in. My friends that are in brokerages, ask Tom Hugard. He used to work for a brokerage. People in brokerages have a very hard job. Why do you think whenever you fill out any form online to do with anything to do with Forex, you get a phone call shortly after from a brokerage asking you to come and join them? Because they are a sales organization, because 80% of their customers every month go. So you've got to go and find. If you had a business model that needed 1,000 customers to maintain the business in a stable manner, and 830 of your customers every month left, and you know that if you didn't have a sales team to replace 800 customers a month, you'd go bankrupt. Is that a fun business? Not a good business to be in. It's very, very hard and cutthroat, which is why brokers go bust a lot of the time. Because they just can't make enough money, which is why I always say stick with the big boys. Axie, Darwinex, IC Markets, FXCM. There's big boys out there, Forex, that have been around for decades. The reason being, they've got the biggest sales teams, the biggest advertising budgets. Who do you see marketing everywhere? Forex Factory. Right now, FXCM. Why are they doing that? Because they've got 71% of their customers. This data that you see here, this is 71%. We just looked at Axie, which was 83. This is updated on a, don't quote me on this, monthly or quarterly basis. By law, they have to update this. I think it's monthly. It might be quarterly, but they have to update that figure with their actual statistics by law. It's one of the regulations. So they've got to replace 71% of their customers. This is why you see these banners all over the internet on everything to do with trading, because their business model is sales. That you are a number. Whether you put 1,000 in your account or 100,000 in your account, totally irrelevant to them. What they do is they make money out of spread and out of commission on every single customer. And if you only put in 500 to 1,000 in, they'll do an A-book on you and they'll take all that money as well. That's literally the business model. And it would be lovely to be a broker, but I haven't got the money to set one up. Costs too much, unfortunately. Would be nice. Right, DAX ORB to the upside. You were stopped out on your short. So if you took the 15 pre, you've got your 1.5 hour return. So you stopped out on your short for X, probably half of your initial risk if you're using a trailer. On your long, you are 1.5 hour return. Your 5-minute opening range break pre-market, if you took that, mine doesn't go up that high, but you would have stopped out on your short, then you flipped long, you probably stopped out on the long as well. If you took a retest of it, you're in, but unlikely. You probably would have got whipsawed on that one this morning. Your 5-minute opening range break is very nice today. So there's your 5-minute ORB, straight long shot, 1.5 hour, nice and easy. So good moves on the DAX this morning. Right, let's look at RSI and ADR and everything. Morning Digital, morning Tammy, morning John. Yeah, lots of sales, nasty. Let me just quickly go over what everybody's asked for. So we had yen stuff, didn't we? Look at US dollar yen. That was it, wasn't it? US dollar yen. I'll quickly do US dollar yen and then I'll look through the ADRs and RSIs. So US dollar yen is pushing to the upside. So this one is extended on the 4 hour at the moment. I'm looking at this at the minute on my Fidelcrest account as a short. So we are pushing up into this propulsion gap at the moment. So it looks like we're returning to origin on this A-shaped recovery dump that we had. We are nicely extended above the 75 now on the RSI on the 4 hour. So this is where I'd look to start getting into a trade. So I'm monitoring basically M5 at the moment for a reversal alert. We did have one. My feed on Fidelcrest is ever so slightly different. The candlesticks aren't the same. That for me was not a reversal alert on Fidelcrest, but it looks like it was on Robo Forex. So it's very tight as to whether or not you would have got a signal short on that. You did have one there, definitely, but I wasn't awake for that one, so I didn't see it. So I'm in at the moment. I'm just monitoring this, waiting for a reversal alert. So I've got a pending order basically, which I'm just trailing up on Fidelcrest because I can't use the EA. So I'm waiting for a reversal alert on this. So H4 nicely extended. We've got a big propulsion move in there. I just realized I didn't set this back when I was demonstrating the other day. The setting for propulsion. So that propulsion gap there, we've got that as a target to the downside, but more likely they're going to try and rally through that to start with. So if we can get an ADR hit on this today, that would be a really nice short. Hourly RSI extension as well is just up there above the 70. But not quite above the 75 yet. It's quite orderly the way that this has moved. We've had this sort of move up, and then we had a little accumulation break there, and then we had a whole day where we went sideways and a whole session, and then we had the big rally in New York yesterday. So that there is your 4 hour propulsion gap, and it's a dual one on the hourly. And we've got this target to the downside and this one. So this could well keep rallying today, and I think it probably will. But when you get in, there's so much downside movement available on it. So yeah, looks good. US dollar, yeah, like it. ADRs today, we've got none at the moment, completely flat on ADRs. Australian dollar obviously had some negative news overnight, not massively negative. So we may well get some ADRs there. We had 2 ADRs yesterday. Didn't really do much at all. It's been flat. Nothing's hit the weeklies. And we got that 1 monthly. So we looked at this one yesterday, the monthly, which was EuroCAD. So nicely extended on the monthly. So there is the beginning of the month. Is here somewhere. So that's your monthly range. Just hit by literally 4 pips, 5 pips. So not a massive one. But it is extended beyond its monthly range. There's some beautiful targets to the upside on this, on the hourly. And we're expecting a euro rally. Canadian dollars still very touch and go at the moment. Oil is still unable to make any move. And we've got this debt crisis with the US hanging over at the moment as well. If the US comes down, the CAD will come down. One of the major debtors for the US is the Canadians. So it's difficult to know what's going to happen with the US, especially with the CAD, because the CAD is so heavily linked to the US. So if we get this rally on oil, which we're expecting, obviously we'll get some strength in the CAD. However, if that doesn't happen and the US starts to default, this euro is going to fly. So euro CAD looks like a really nice long opportunity at the moment. I haven't got it on myself yet. I had that trade on Fiddle Crest, which I'm out of. So I will still only take it on extensions. I'm trading the Fiddle Crest account exactly the same as I'm trading everything else: H1, M5, H4, M5, and ADR reversals. Same stuff, just doing it manually. So I like that as a long opportunity. If you want to hold on it, you can see these monthlies. You can almost play these as if they're swing trades. That is potentially going to turn into a W pattern reversal here. So this is the retest at the moment, potentially. If we don't break that low, we're off and we're going up somewhere. You've got obvious support resistance levels here, which we're going to hit, which is 125 ADR within that propulsion gap. So that would be where I'll be looking to go. So that's your ADRs, your AWRs, and your monthly ranges. RSI extensions. We've kind of looked at the yen already. So we've got the yen on the 4-hour and the hourly. So that's the hourly, that's the 4-hourly RSI extension, and that's the hourly RSI extension. So US dollar yen, very nicely extended to the upside, up in this propulsion gap, potentially where we're going to reject from. DAX is completely reversing this morning's move. This is a mess this morning. Just seeing if there's anything coming out for these two euro bods which are talking. The Guinos and the COS are speaking. We've got CPI at 10, but really, really jittery this morning. Very hard to make money out of that today. It's all over the place. Just seeing what happens when we get back to this wick test here. So if this is going long, that's your low, that's your high. We're looking for a higher low. So this is where you would be looking for a buy if you're going to take this long. We're back within the pre-market 15 opening range. That's your 5-minute opening range candle there, which we're just looking at retesting now. So we'll see what sort of reaction we get here. I really like this short, and the fact that that flew so hard this morning kind of looked like it was going to go long, didn't it? But there's much more reason for this to short than to long. The DAX has just filled that gap on Fiddle Crest. See the difference in feed? Look, gap fill is done on Fiddle Crest. Robo Forex, it's not. Totally different data. Okay, so potentially long trade, stop under there. If we are going to go long and we are going to retest yesterday's high, last week's highs, sorts of levels, you're looking at a run up to there and up to there. But that looks bearish, doesn't it? I much prefer a break of that level down to there. That's a much nicer trade. Tricky one today. Up to you. Somebody just asked for gold, Marion. Glad to find you with all the excellent inside information. It's not inside information, it's all out there. It's just you don't know stuff until you learn it. Always be learning. One thing you'll learn about this industry is you never stop learning. There is always something. You meet somebody. The beauty of this industry is everybody's out there trying to help each other or rip each other off. One or the other. There doesn't seem to be a middle ground, but there's forums, Telegram groups, Discord channels, all that sort of place is an absolute wealth of knowledge. You will get lost in forums, especially Forex Factory. I got lost in Forex Factory for about a decade. But everything you need to know is there. So you never stop learning. You'll suddenly talk to someone in a forum and they'll say, have you seen this? And you'll go, wow, didn't know that. There's so much going on in this industry that you will always find new stuff. So, but obviously, most of it's a load of crap, as we know. Hey, why do you dislike 8 cap out of curiosity? I'm looking to do a prop challenge and I'm wondering if I should avoid the ones using 8 cap. The reason I don't like them, and I don't know, if you want to go and do one, let me know, update me. But I've done 8 cap evaluations with 2 different firms. And the market execution on 8 cap is awful. The spreads are bad, and the execution is incredibly slow. So you press the buy button and you will sit there for 3 to 5 seconds waiting for your order to execute. So if you're in something like, and I was at the time scalping the DAX, when you're scalping the DAX like this and I hit the buy button, I need my order executed. Yeah. So I wanted to get in there. In a fast moving market, if I get executed down there, that's the difference between maybe $200 to $300. Yeah. When you're looking at hitting an $8,000 target, that's a big problem. So I just found them incredibly slow. I've tried 2 different prop firms with them. That was my experience. If it's changed, fine. But they are a white label brokerage. Their business model, I've just gone through the business model of brokerages. The other business model of brokerages, it seems, 8 cap are starting now, is to white label prop firm funding. So they provide the data feed to prop firms and they give you a website. You can press a button, fill out a form, and all of a sudden now you are a prop firm. And it all uses 8 cap. And it's just bad execution. So as Daniel's just said, true, I'm doing one now, 8 cap sucks. If you want to find a good brokerage, go to my website, a good prop firm, go to my website, go to the trader funding tab. These are all affiliate links, being upfront. This is affiliate marketing. I don't make any money out of it. Nobody seems to be clicking on the links. But anyway, so these are all the prop firms. So I've put together this comparison table. You can filter. These are the top prop firms as far as I'm concerned. None of these are 8 cap apart from Surge Trader. Surge Trader is an 8 cap broker. I've left Surge Trader on there because they have a 365 max day rule, which is great. Their payouts are not bad. Their targets are amazing. They are a 1-stage evaluation broker, prop firm, but they're more expensive. Their max daily loss sucks. Their total max loss sucks. But because they're 1 stage, if you have a successful run on stage 1, you've passed. Yeah. So that's the advantage. You've got to be good out the gates. Yeah. No mucking about. You've got 6% max loss and your daily's 5. So you've got to make sure that you know, I've talked about this many times. You start trading on day 1. 1 or 2 things is going to happen. You're going to get into an unlucky run or you're going to get into a lucky run. You have no control over that because the market determines which way price goes and your strategy's got nothing to do with it. These guys, if you get on board with them on 1 stage, there's only 10% to hit, but you've got to get on that lucky run. So that's why I left them on there. But these guys, True Forex Funds, Fivers, My Forex Funds, Citi, FTMO, Fidelcrest, EA, and Audacity, these are the top guys. These are the guys that have been around for a long time. They're well established. They've got good funding behind them. Their programs are good. Their execution is good. I've traded with all of them. I've been funded with half of them, and I can vouch for them. So these are the ones that I think you should be looking at. Everybody in 8 cap is using the same model. None of them have better prices. None of them have better execution. None of them have better rules as far as I'm concerned and as far as I know. But if you find someone that's better, let me know. I would be happy to trade with 8 cap if there was an 8 cap broker, prop firm, that had much better conditions than everybody else. So if somebody went out and did an 8 cap evaluation prop firm and their prices were 2/3 of the price of my Forex funds, and you can use EAs, and you've got 100 to 1 leverage, they would become top of my list because I position trade. I don't care about execution as much now because I'm not scalping. So I was scalping a lot towards the end of last year because I was forced to, because the market just wasn't moving enough. Position trading wasn't right. So I went back into scalping mode and I was doing a lot of that. I'm not doing as much of that now. So go and check these guys out. There's a link to the website. DAX is out the low. So we are running to the downside. So short the DAX. 5. So I'm shorting the DAX on Feudal Crest. Target is basically ADR. ADR or ADR 125. So stop basically above, literally above there. So either this is going to run or I'm out. I'm not interested in going back into this range. It's just I will either get stopped out on a break of the high or I won't. Right. Sorry, RSIs I was doing, wasn't I, before we started waffling? So yeah, there isn't a lot to look at on the RSIs, to be honest. So US dollar yen we've covered. Aussie dollar, New Zealand dollar is an hourly. I was in this for a short. I prefer this as a short at the moment. However, it is extended on the RSI, so it will mean revert. So we're looking at this downward move and pullback. Sorry, continuation. Let me just zoom out a bit further. So this move here, we're looking at a continuation short on this to break that low. If market structure is going to hold short, Aussie is definitely weaker than the New Zealand at the moment. So it is an extension on the hourly to the downside, just about. It's not enough for me. I want to get below the 25 at the moment, but highly likely to mean revert into here somewhere. It's been very, very tightly traded. You can see, it's been trading up and down and up and down and up and down a lot on the way down here. So it is very efficient. We've got a propulsion gap there, and we've got obviously the big one from the initial reversal alert. So we've got this low coming up and this low coming up, which is respected a few times. So ADR today to ADR 125 would be absolutely perfect, because that will take us below the 25 extension on the RSI. And it will also take us down into last week's low and beyond the previous week's low, which was an area we're going to find a lot of limit triggers. So I like this down here. You could take it from there and then take a second position down there if you want to get aggressive. Depends how aggressive you're running. But if you drop down to M5, just wait for the reversal alert, which is going to happen at some point. It could even happen on this candle. So that's your extension below the 30, and then take the 5-minute entry. So that's extended. And on the 4-hour, Aussie CAD extension on the 4-hour is playing out. So you kind of missed this one. This was yesterday, really. So it stopped down here yesterday as it filled that propulsion gap. Look. So that propulsion gap, which was the origin of that accumulation break and that move to the upside, came down into it, stopped to the pip, and went, had enough. Yeah, we've retested that level and rejected it today. So that looks like a nice long back up into propulsion. Obviously, the Canadian dollar needs to remain weak, but this, you can see why this has happened. And again, if you don't, the reason I built this indicator with all these support resistance lines on, this is a perfect demonstration of why I have this indicator on my chart. This is the monthly low. This is last week's low and the previous week's lows here, these lines. Look at what happens in a range when you are range bound. And the market spends 80% of its time in a range, just moving from support to resistance, bouncing around what we call an area of balance while we're waiting for the next price discovery to start and see if we can trade in a different level. When you get to these levels, the market just respects them, because big players stick their orders at highs and lows. So they buy up the lows and they sell the highs. That's where the terminology buy low, sell high comes from. When you get to a range high, you sell it. When you get to a range low, you buy it. So that's basically what the market's been doing for 100 years, and it will continue to do so as long as there's a market. So this is exactly where you want to be buying it from. At some point, you're going to get a range break. If that happens, then you're managing it as a position and you're scaling in at another level. But this is a beautiful extension on RSI on the 4-hour. Yeah, at a beautiful level of support resistance, and be looking to play it back up into there. So really nice opportunity for a long on Aussie CAD. Like that one a lot. And I've got that on at the moment. So I am running that already. Good one, Dax. Stab me in the back, why don't you? So watch this propulsion gap for potential short. So at the moment, we've broken to the downside, broken to the upside, now broken the lows again. Now we're pushing back up. So this propulsion, if this is going to be the peak formation high, low, lower high, drop. If we are going to run to the downside on the DAX today, that's where you want to be shorting it. Tempted to turn this into a position trade. I've taken too much lot size on it though, so I can't really. Dangerous. Right. There we go. Catch up on the chat. So that's all the analysis done. Apart from somebody mentioned gold, didn't they, Marion? We'll get the bling out. Get the bling out the way. Gold. So we're still stuck on gold. The propulsion gap is now filled. We've got these lovely lows here as a potential limit trigger. There's no news on the US dollar to worry about at the moment. So the next news on the US dollar is unemployment claims tomorrow. So 1:30 tomorrow afternoon, we've got the unemployment claims. Forecast is for it to drop, but I'm not sure that's going to make a massive amount of difference at the moment with this debt crisis hanging over the US. I think we're probably going to wait for the Fed to say something before the market is really going to want to put any movement into play. We've got Powell speaking on Friday afternoon at 4 o'clock. So to me, that is probably where we're going to get some clues as to what's going to go on with the US dollar. So I'm not necessarily sure the unemployment claims are really going to do a lot tomorrow, but we'll see. So obviously this is US dollar cross. So it gets affected by the US movement. As you can see, we are range bound. Moment. So where we are off of an RSI extension to the downside. So I'd be looking for a bounce somewhere there. 2 propulsion gap fills to the downside for longs. And we've got targets to the upside to come and fill. So you can see, obviously, all the propulsion gaps, that's what they're there for. They get filled. We know they get filled. So at the moment, you've got targets to the downside and targets to the upside. Equidistant. So flip a coin and choose a direction. One of them is going to work. There's your John Wick coin. Don't know. At the moment, it's more of a long than a short, but I like it here. I'd love it there. If you got that level today, I'd be interested in longing it. I wouldn't because I don't trade it. But that's what I would do. Aussie dollar CAD looked at already. Morning, John. Morning, John again. Another John. John. Tony, yes, broker data. I'm pretty sure the DAX gap we are waiting to be filled was filled on my IC Markets feed. So your IC Markets feed probably shows pre-market data, Tony. And if that's the case, it will be filled. So look at my DAX on Fidelcrest, and Fidelcrest have pre-market data. So on Fidelcrest, the gap on the DAX on Robo is 152.04, which is somewhere down here. Yeah, so there's the gap. So the gap is somewhere around there. Yeah, but look, it's all filled. There aren't any gaps on Fidelcrest because they use pre-market data. So what we're interested in is the futures market. So this is a CFD, which is a contract for difference representation of the futures market in the Frankfurt exchange. In the Frankfurt exchange, it doesn't open until 8 a.m. So this broker, Robo Forex, represents data starting at 7 a.m. Yeah. So this is an hour before the Frankfurt exchange opens. So this is why you see the gaps here. This is proper. This is what you'll see in the futures market. Yeah. And this is why these gaps get filled, because there are overnight futures contracts left in place on stocks here, which all of a sudden, if I'd taken a short or a long there, to be able to get my position closed, I need price to get back to here. Yeah, especially if I'm short, obviously. So we drive the price back down to fill the gap. Yeah, gap, fill, gap, fill. Yeah, so that's why they get filled. There's one there, filled. Yeah, so they always get filled. Sometimes they last for a few days. Depends how rangy the market is a lot of the time. But if your broker doesn't show them, your broker doesn't show them, and you won't have them as targets. But you'll find it's very rare to leave one in the futures market. It takes something quite substantial shifting at that time. A little bit like oil. Look at oil. Yeah. We spent 2 weeks, didn't we, watching this, going, short it. Just keep shorting it because it's going to come and get that gap fill done. And it did. We took the short. I took the short from here down to there. It's just what happens. The market is efficient. It has to be efficient. Think about every market in the world. You've got somebody selling something, apples, oranges, bananas, whatever it may be. He's selling those for a price. Somebody wants to buy them at a price. And basically, if the guy wants to pay this, and this guy is selling his stock here, and there's no one wanting to buy his stock at that level, he has to move down to the level where people are willing to transact. And that's where he'll sell them. And then he'll creep his price up. And as long as people keep buying it, he'll keep increasing his price until he increases his price. And then all of a sudden his sales go down. Then he'll move it down and then his sales will go up. And that's how all markets in the world work. Amazon, eBay, the stock market, market that sells cars, your fruit and veg market, everything. Oil, sellers were here. And all of a sudden they were like, holy crap, we're in trouble. We need to get this price down. And they manipulate the market back down to the point where they get equilibrium. So you have an equal buying and selling price. That's why gaps get filled. There's a lot more technicals going on under the market. There's a lot of algorithmic trading that forces it. There's all sorts of stuff going on. But at the end of the day, the balance sheets we're talking about here are in the trillions. So these guys have got enough money to push it where they want to push it. And that's just what happens. You don't need to worry about the whys, the whens. You just need to worry about it happens. We've got a gap on oil here that is unfinished business. It's what they call it in the futures market, unfinished business. So we're coming back up there at some point on oil. You can never tell when it's going to be there. So you just know it's going to happen. And it's exactly the same with the DAX, which is why I'm of a short bias on this, because when it goes, it will go. It will suddenly go, right, let's go, guys. And that'll be it. And we'll be off. And that'll literally come down in 3 or 4 days. It'll be there. Probably not 3 or 4 days, because this is actually a long way away. Occasionally, though, they do get orphaned. And there's nothing you can do. And the longer you tend to be away from a gap, the more likely it is that it doesn't get done, because the market just writes it off. Again, you know, banks and institutions also lose money on trades. And these are the ones which they tend to get caught wrong-sided on. So they're caused by fundamentals normally, and those fundamentals may not ever have enough power to get shifted back. So 3-5 seconds is like a lifetime to execute, yeah. I must be lucky. I haven't noticed any problems with 8-cap, JC. It's a, you know, this is the thing. You'll only notice a problem if it's a problem to you. I was using, when I did my 8-cap evaluations, I was using the Price Action Toolkit to scalp. I was hitting the button and sitting there watching price do this. And then it would go, my order would go in. And I'm like, that's not the price I asked for. I'm scalping on 5 minutes. I could be out on the next candle. You can't make me execute that long. If I'm position trading and I hit the button now, I couldn't give a monkey's where they fill me, because I'm shorting it down to here. So execute me there, or there. It doesn't make a massive, it does make a difference, but it doesn't make a massive difference to me, does it? But most people on prop are trying to scalp their way into the money, which is very, very difficult to do. And they're all trading M1 and M5. An 8-cap, you can't do that, because it's too low execution. So But if you're trading higher time frames, real time frames that can make you sustained income, like hourlies, doesn't make any difference, does it? So I don't have a problem with 8-cap in that respect, but there are better. And the other thing is, these companies that are starting with 8-cap, yeah, so don't forget, right? A lot of prop firms go bust. A lot of them. Not go bust, but they suddenly vanish. There's loads of them starting up on a weekly stroke monthly basis at the moment. And they're all starting up. And most of them are starting up with these guys because they give you a white label way to do that. Yeah. So where's their... I can't find it. I can never find it when I'm looking for it. And white label. Yeah. So they're all starting up with these guys, and they haven't got the funding behind them. They don't realize the business model does have a failure rate. And if you don't have enough money to pay the traders that make the money, you go bankrupt very, very quick. So unless, as I said, these guys come with an offer which is way better than my Forex funds or E8, who, in my opinion, are untouchable from an execution, a market condition perspective, and a price perspective. Bear in mind, you do probably 5 to 10 evaluations a month if you're doing it properly. Money is important. Yeah. So if I can get funded with these guys and they have the same conditions as another a prop firm that uses 8-cap and they're cheaper, which they are, why would I ever need to use an 8-cap prop firm? These guys have been around a long time. They make $20 million a month in evaluation fees. They're a huge organization with masses of money behind them. They're not going anywhere. Neither is FTMO, neither is Citi, neither is E8, neither is Audacity. Audacity been around for a decade. One of the very first prop funds. These guys used to be, when I was looking into funding years ago, when you had to actually go and sit on a desk. Prop firms have been around forever. In my day, you had to go to a prop firm and rent a desk. If you wanted funding, you had to pay £2,500 a month to rent a desk. So before I got anywhere, I had to make $2,500 just to cover my trading desk as a prop trader. I didn't do it because I couldn't afford it. But these guys were, before they went online, that's what they did. Yeah. They've been around forever because they're doing it properly. And all these guys, in my opinion, are doing it properly. Everybody that's white labeling off of 8-cap, I could do that this afternoon. I could be a prop firm this afternoon. Unlikely I'm going to be around next month because I have no idea how to do the business model for a prop firm. Well, I do, but I don't have the money for it. So just, you don't need to. Use these guys. They're all brilliant. Harry, I am trading on Funded Next. It's good. Yeah. Who's Funded Next? That one. Yeah. Again, they're another one. They've got sponsorship of the Bengal Tigers. Look like a very decent firm. Don't know if they're 8-cap or not, but looks good. But you know, look at the evaluations. A 2-step evaluation, $100,000. Profit target is 8 and 5, which is good. Daily loss 5 and 10, which is good. No time limits. Minimum of 5. Commissions $3 a lot. That's a round trip. That's fine. Leverage is good. Refundable fee 519. My Forex funds, exactly the same rules. Price $499. Why would you pay the extra money? Again, you can't beat the price of my Forex funds. E8 is more expensive, but E8 you can pass in one day. That's why you pay that little bit extra. You know, there's no, they're all comparable. But my point is the fact that there are 10,000 prop firms out there now. I don't know how many there are, but there's a lot. You're not going to beat the big boys. Same with brokers. There's hundreds of brokers to choose from. there's about 15 brokers that have been around for 20 years who are the biggest in the world. Why would you use a small tin pot company when you can use a big company with better infrastructure, better support, better market execution, and better access to the dark pools of the market? That doesn't make sense not to use a big broker, does it? Doesn't make sense not to use a big prop firm, does it? Just the way I look at it. I'm logical though, so it's always not always the most fun way to be, is it? Keith, I'm on 8-cap demo now. Handling a breakout EA, not bad. Cool. Do Surge allow overnight or weekend holds? Yeah. Surge Trader allow weekend holds. The only problem with Surge Trader is their leverage is 1 to 10. So leverage is bad. And you've got to have user stop. These guys are set up more for your traditional stop loss based strategies. So I think the best way to trade these guys is to use a mean reversion strategy that has somewhere between a 50 to a 60% strike rate, and go for a 1.5R return instead of a 1.25 or something like that, and just use support resistance bounces. There's no time limit on it, so you just literally set it up to do 1.25 or 1.5Rs, and you'll have to wait until the market conditions allow that profit target of 10% to get hit. But going with high risk, going with 1% a trade, so you're making sort of 1.5% a trade. You get, do the maths on it. You're making 1.5%, and you get 5 trades in a row work out, 7.5%. Your target's 10. You only need five trades in a row on a lucky streak, which is doable. If you'd have been doing that in the last month, you'd have passed this no problem. You couldn't have not passed it because the market's just been range bound. Look at it. You're doing support resistance bounces. There's no way on earth you couldn't pass an evaluation this month. It's just too easy. Market conditions are not like that, though. They usually are, so we wish. Funded Trader Plus for me has the best conditions, but our 8-cap. Yeah, I mean, they may be better. My funded FX, bespoke, funded next, no time limits. Yeah, there's loads. As I say, you're reading off thousands. None of them are any better or worse than these guys. So use who you like. It doesn't matter who you use. Just focus on what's important to you, and that's what that filter system is for. So you can filter the prop firms down. But all the ones you're mentioning, the rules are virtually the same. Everybody tries to mimic my Forex funds because these are the biggest and the best. So everybody tries to mimic them. They try to outdo them ever so slightly on certain conditions, but there'll always be a payoff, and it's usually price. They're usually more expensive. So, that's labor the point, but I just don't see the point in not using somebody else. But GJ outlook on the 4 hour. If you got any FX pairs you want to look at, let me know. Not really going anywhere at the moment. So it looks like a wedge break to the upside. Pound, we should. Bailey speaking later, so we might find 10.50. We might find we get a rally on the pound. We'll see. I've actually got a short on that pound yen at the moment, which I think was an hourly. Or was it an ADR? It was an hourly. So I took the 70. No, I didn't. Why did I get into that? It was an ADR hit. And I'm break even on it. So my entry was here. Can't even remember why I got in it, but I've got a short on at the moment. I hope it wasn't on that gap fill and I missed it yesterday. This is the problem with trading manually. Let's see what my target is. Let's have a look at the trade, shall we? Pound yen. Oh, there you go. There's my target. So I'm in. I'm in there. That's where I got in. So this was the ADR reversal from Monday. We pushed up, pushed down. I didn't get out. I have no idea why my target is there. This is the problem with trading manually. You just do stuff and you forget why you've done it. RSI extension, ADR extension. That should have been out yesterday. I missed the exit on it, didn't I? Probably because it wasn't enough. Yeah, it's $500. So what I'm actually targeting is back down to those lows. But what I might do is just take that again. If we get a spike on the news to the downside before it rallies, I'll take it off. I've got second position up at the highs. Look, that's a pending order. That's the last week's high and monthly high. So there's going to be a lot of limit triggers up there. So I've got a second position there. So if this does rally, we get a limit order trigger off of that. That gives me an exit. One question, how should I find the best entry time for a trade if I'm doing price action? Because every trade goes against me. You can't. Anna. You've done the boot camp, haven't you? So one of the big problems that the boot camp fixes is timing. You cannot time an entry. If you're using price action, what I would suggest is you use the market reversal alerts indicator, but I'm biased because that tells you when there's a structure break, i.e. the sellers. Price action, basically, all price action is a fancy way of saying that the people that had control of the market last time haven't got control of it now. Yeah. So we got a big bull candle. Now we got a big bear candle. Price action is a bearish engulfing, which means the bears have taken control of the market. Now, last time, the bulls had control of the market. So because we've had a bear candle and a bearish engulfing, what makes you think that that's going to go down? Why can't it go back up again with another bullish candle? Because last time we had a bullish candle, the bulls were in control, then the bears took over. So what's to say that the bulls can't take it back over again? Yeah. So price action works sometimes, fails other times. It's got roughly a 50% strike rate. Why? Because there's 50% chance of the market going up and down every time there's a tick. So that's price action. That's why it doesn't help you particularly. Reversal alerts, however, show sustained movement by one party in one direction. So we are looking at market structure, breaking back to the opposite direction. So we haven't just had a bearish candle. We've had a big, strong move. Now, the move is bearish. I'm not looking at a candlestick, a period of time or anything. I'm looking at the last time the bears tried to go short, we pushed away. So the next time we break down below that level, we can assume that the bears actually won that battle, that they lost. That is a structure break. This is why this rectangle is drawn on the last bear candle before a bull move and the last bull candle before a bear move. Because when we break that level, it means that the guys that tried to battle away there and lost that fight have actually won it back again. That's why the market structure exists. This is what it's all about. This is how to read market structure. This is what this indicator does. So what you're trying to do is time an entry. You're trying to go short there with a stop there. That doesn't work. Because just because the bears won there doesn't mean the bears are going to win this and move it down. Bulls might win it back. You don't know. What you do know is when the market is extended beyond normal conditions, it comes back the other way. So if you're trying to time when that is going to happen, you're going to fail. And that's why removing the stop loss from your trade removes the loss, but you get it right. One of the slides in the boot camp, fairly close to the start of the boot camp, explains it. Yeah. Problems that traders have. Trying to pick tops and bottoms of ranges, trying to pick the pullback point in a trend. Yeah. These are all the problems that everybody has. Everybody in this room right now has got these problems. I've got these problems. Everybody has these problems. It's just part of trading. Every single one of them, virtually all of them, are to do with that. You can't time it because you've got no control over it. If you've got no control over something, how can you time something? The only thing that can be timed is a specific event that executes in the market, like the open of a stock exchange. Other than that, you have no idea when something is going to move, apart from on a news event. So if you look at price action and you find a hammer or a shooting star in the market, like that one there, 50% of that is a wick, so you could call that a hammer. Was there a bull move after that? No, collapsed. But did it go above that candle? Yes. So if you put your stop there, you're guaranteed to lose money. If you don't put your stop there, you're guaranteed to win money. So if you're trying to use that bearish engulfing there, beautiful outside bar bearish engulfing, that one worked. Yeah. Beautiful outside bar bearish engulfing. Fail. 50%. So if you get into every price action candlestick pattern that you find, which will have something like a 50% strike rate, and you use a positive 1.5R return, you will make money in the market. But you won't be able to do that because every time you get a bearish candle after you've gone long, you'll be scared and you'll get out. And what you'll end up with is a 1.05 or a 1.1R on 50% of your trades. But your strike rate will drop because you won't be letting your winners play out. And all of a sudden, you'll start losing money. And again, it's all covered in here. Getting in just as the market turns the other way. That's exactly what you've just said. Day one bootcamp. Aussie dollar CAD. We've looked at that. 4-hour RSI extension. Long. Range bound. So this low is holding at the moment. So look for a trade back up into the highs. So this is a range, obviously an area of balance. This is where the market is happy to transact and has been happy to transact for over a month. There's no reason to think that this should go any other way at the moment, unless the Canadian dollar gets a nice big rally. Then we're going to pop out to the lows. If we're going to pop out to the lows, you want to be looking for a move down to there, which is about 250 ADR. So you'd need to get in and scale in, wait for that profit take move to bring you back out. Afternoon, Tom. Evening, Ike. Peggy, UJ short on 4-hour. Yep. So we looked at UJ at the beginning. So it's just extended now. The 4-hour candle's got another hour left on it. So at the moment, we're showing a 72.5. Currently, RSI is 75.28. So that's going to light up as a really nice entry. I'm looking to get in this short at the moment. I'm looking for some US dollar weakness, and I'm hoping that if we don't get it tomorrow, we're going to get it on Friday when Powell starts talking. So the only thing that can scupper this one really is the yen being massively weak. But we're in a propulsion gap, which we're likely to get a reaction out of. We've got nothing but targets painted to the downside, and we're coming up to a high. So an entry here when we get a reversal alert is probably a decent entry. Failing that, scaling up there, waiting for the pullback. So it looks good. I like it. Are you long on GJ overall? No, I'm short at the moment. I don't know what the EA is up to with GJ. Not in it on ADRs. Not in it on H1. Not in it on H4. Not in it. I've got a short on it on Feed or Crest at the moment, GJ. But overall, you mean overall? Yeah, I mean overall, I think it's going to go up. Yeah, and quite possibly at 10:50 in an hour and a half ish, because we've got Bailey speaking. So when Bailey speaks, he may well rally the pound. He may well dump it. Again, timing. I have no idea if this is the right time to take a short or not. I don't care. If it pushes up, I'll get in again and I'll get out later. This is the whole premise of position trading. I don't have to worry about whether I'm 100% right direction or I've got any clue about timing the market. I get in with an opportunity based on a condition I see happening over and over again. That's it. It's as simple as that. So when there is a reversal alert and an RSI extension, I'm in. If it's right, I'm out. If it's wrong, I'm in again. Did you do Swiss yen? No, haven't done Swiss yen. There's no reason to do Swiss yen. There's no extensions on it. There's no RSI or ADR extensions on anything much at the minute. It's flat. But Swiss yen, I mean, it is just totally flat. Last entry on this was all the way up here. Look. Since then, no trades. Haven't traded it for a couple of weeks. Targets to the upside. I mean, the yen is weak. The yen's been weak for a few days, as we just seen with the pound yen. So I like it. So bear with me a sec. Yeah, so I like it. As a potentially a long and just continuation on this weakness that we're seeing in the yen at the moment. But obviously it can move at any point. It's a really nice short opportunity at resistance. We found some limit triggers there. We've tried to push through again. Whoop, is that going off? No. Robo Forex disconnection again by the looks of things. So yeah, it's just difficult to call this one, isn't it? It could well come back down and just do these little bits before it pushes up to there. It could push up to there and then hit 125 ADR and come down. Could hit 125 ADR, pop off of it, hit the weekly high and drop. Right now, it's just sitting up here, not of any interest whatsoever to me. So 4 hour, not extended. But all the yens are longs from a technical perspective at the moment. If you look at the directional bias, pretty much everything yen is a long. US yen, Swiss yen, Euro yen, pound yen, Aussie yen even is range bound, but a little bit more long than short. New Zealand yen, same thing. They're all like that because the interest rates in Japan are 0.1 negative. I don't see any reason why they're going to do anything different. So everything is kind of going to be stronger than the yen. However, the yen has rallies. And when the yen rallies, we get that climbing up the stairs, falling down the elevator shaft type move. So I don't really think you can have a bias on it specifically. If I had to only take one direction, I would long it. But mean reversion, you can kind of do what you like. Looks like all the yen pairs are set to drop. And well, they're all kind of nothing, aren't they? There's nothing, you know. Look at this Aussie yen. Look. So longed it there, shorted it there, longed it there, longed it there, shorted it there, shorted it there. Doesn't matter. Yeah, it's a long, but you can mean revert it. Look at the buys, yeah? One buy, that one took 2. Shorts all took 2. Oh no, it didn't. That one took 1. So yeah, it doesn't matter, does it? up or down. I don't care. As long as it moves up and down, I'm in and out. I don't really mind. But yeah, I don't know. Yens are just, you know me, I rely on my dashboards. If it's not extended on the average daily range or it's not extended on the relative strength index, I'm not interested. I wait for the opportunities to come to me. I don't go looking for them. If you're going looking for trades, you're going to get into stuff that is just not going to work. So wait for the setups to come to you. Don't try and force the setups. DAX, just broken back out the highs. We've tapped into the monthly high on the DAX now. So we're back up here, rejected off of it. So this is a higher, a lower high, lower high, lower high, low, lower low, lower low. Just not going anywhere. This is a great sell. I've got one on the DAX short. I might take another one. Should I take another one? Exit. I'm going to hold it for the minute. So just taking a second short on it, bringing my average basically up to there. Exit there is going to make me a grand. Stop above the high basically. But I quite like holding it down to here. This is bearish. Very bearish. Some might look at this as a flag break opportunity for a long, but to me that looks like it's going to come back down and just come and retest down here. There's nothing to move the market at the moment. It's just dead. Everyone's too scared about this US dollar thing. EJ looks unclear, JC. So if it looks unclear, skip it. Remember what my old mentor used to say that I've said in here a few times before. If you go through the charts, yeah, and you look at it and go, no idea, move on. No idea, move on. No idea, move on. No idea, move on. Just move on. You can't find a setup, don't force it. Every trade you force will lose. Or lose worse than one that you know has a much higher probability of working. What do you think about ChatGPT and the future in AI in relation to the Forex market? No idea. It's going to change the world. How it's going to change trading, I don't know. There's enough software and machine learning models out there at the moment to create quants. I'm not sure that ChatGPT can really improve upon the quant side of things. Strategy development, it can't do it any faster than a lot of other software, I don't think. So if it can learn to trade better than a human, fine. Whoever developed that model is going to make a lot of money, aren't they? But I don't know it's going to affect anything else. Don't know. Who knows? This industry has changed massively over the time I've been trading. But the one thing that's remained the same is there are buyers and sellers, and every outcome has either a +1 or a -1. That isn't going to change. So whether or not we all start using AI to do that and that, or we use an EA to do that and that, or we press the buttons manually to do that and that is going to happen. As long as that and that happens, there's a market. And as long as there's a market, it's going to move up and down. As long as it moves up and down, there's an opportunity to press a button and get a profit out of it. How ChatGPT is going to affect it, I don't know. I'm certainly not going down that route at the moment. I don't need to. And people are still losing money. Yeah. It's a zero-sum game, basically, and you still lose money out of it. It's one of those weird things. The thing, and again, coming back to what I say in the bootcamp, this is the reason people lose money. Yeah. You can have the best strategy in the world handed to you, and you have had them handed to you. You've already, all of you have got a fantastic strategy. And it's not mine. It's one you've had. You've been in this industry for a month or a decade. You've got loads of strategies you've learned. And a lot of those are hugely profitable strategies. If you remove that element, they all work. That's what stops you making money. And most strategies get the direction right. That's the thing. Most strategies know and can predict with some degree of certainty that it will move from an area to an area. What they all try and do is fine-tune the indicator settings or the strategy settings to time it so that you have the minimal amount of drawdown possible. That's the thing that the strategies can't do. And I don't think ChatGPT can do that either. And that's why people lose money. You know, and 83%, like we looked on Axi's website, 83% of their customers lose money. 71% of, who else did we look at? Was it Robo? FXCM, wasn't it? FXCM on the advert. 71% of their customers in the last month or quarter have lost money. Yeah. They haven't lost money because they're not good at trading, or they're not good with a strategy, or they haven't got a good strategy. They've lost money because they put an order in the market that said, if my timing's wrong, take it. What does it do? Of course it's going to take it, because the market moves like this in a random fashion. So you put an order in the market to say, take me out in a random fashion. It's going to take you out in a random fashion, probably 50% of the time. Except you can't hold the rest of them long enough to make you a profit. That's why 71 and 83% of people lose, not because their strategy is crap, because they can't time the market. You can't. I have no idea when it's going up and down. But as long as there's people that want to buy and sell, it will continue to do that. And as long as it continues to do that, we continue to make money. That's it. Do you think if recession gets bad enough, they would restrict traders from making money in the markets in an Armageddon apocalyptic environment? If there's an Armageddon apocalyptic environment, nobody's going to be making money because we don't have any electricity, because somebody will have dropped a bomb which wipes out everything. Just keeping it fun with interesting questions. I don't know. Yeah. The danger in our industry is regulation. That is the thing that will kill retail trading. We've already had one round of it. We used to trade 200, 100, 500 to 1 leverage. Most of the world now has limited leverage to 30 to 1. So we have to go somewhere else and bend the rules to get our traders on, because in the UK, I can't sign up with a UK broker now because I only get 30 to 1 leverage. I can't operate in 30 to 1 with my strategy. So that's what's going to kill traders more, is regulation, or them pulling the plug on retail trading. You have to have a license, a commercial license, or you have to be a business, which is going to make the route to market more difficult. That's what's going to hurt us, I think, moving forward. We've had lots of regulation, but there's always ways around everything. This market makes an absolute fortune. Brokers make a fortune. And if the market turns around and says you can't deal with retail people anymore, they will become gambling establishments because it's legal to gamble. And when they clamp down on gambling, they will do something else. So instead of becoming a CFD trader, you'll become a spread bet trader. They won't charge commission because they're not allowed to, but they widen the spread by another pip, and that's how they make their money. There will always be a way to do this. It's just you've got to bend and shape yourself around what the regulation is. This is why none of my brokers are in the UK, because I can only get 30 to 1. I was with DOW and NASDAQ for years. I had to move away from DOW and NASDAQ because they didn't have an overseas branch. I went to Axi. Axi now don't have an overseas branch, but if you knock on the door and speak to the broker and say, you know, that 35 grand I put through you each year, you're not having it anymore because you can't help me. Oh, hang on a minute. Let me speak to someone in Australia. All right. Off I go. I'm in Singapore at the moment. You know, there's always ways around everything. That's what's going to hurt us. I don't think ChatGPT and things like that are going to impact it. I think it will enhance it, and I think it will probably, there'll be models coming out that will help us. The Chat GPT indicator, I'm pretty sure that's around the corner. If it's not already, there'll be AI models out there that people have said that they've built. And if you see one for MT4 and MT5, probably a con. But, you know, I don't know. It's interesting. It's going to be an interesting couple of years from all sorts of perspectives. You know, we had a guy on the news last night in the UK. The guy from that developed ChatGPT has just had to confess in front of Congress yesterday in the US and said, I'm worried about this. You need to regulate us. And, you know, for a business that makes a lot of money like OpenAI, going to the Fed and saying, you need to regulate us, because if you don't, we're going to blow the world up in a Terminator fashion. It's worrying, isn't it? And then one of the Congress members basically had a recorded speech which was delivered to Congress. And basically, it was his voice, but it wasn't him speaking because an AI clone had generated the voice. And the speech that he delivered about AI was written by AI. So he sat there and went, you've just listened to me, my voice telling you the dangers of AI. I didn't do that. It did. Worrying, isn't it? And there's all sorts of things that it's going to be able to do that people in the wrong hands are going to get hold of it and do all sorts of damage financially from a perspective of government influencing people to vote in a certain way, spreading disinformation, deep fake videos. Look at my John Wicks. Yeah, this isn't John Wick. Obviously, doesn't look like John Wick, but it's quite similar, isn't it? This is OpenAI at the moment. I told it to generate John Wick trading. It knows who John Wick is. It knows he wears a black suit all the time. It knows he's got a dog. It knows a lot. And it's pretty good at generating stuff like this. Not going to be long before it's able to make its own videos and its own YouTube account and its own email addresses and put its own content out there. Then what happens? What happens when we say, no, we're going to regulate it, we need to shut you down? Does it get angry? I don't know. Is it already in everybody's computers? I don't know. Terminator's coming. Seymour, greed makes people lose money, changes your disciplined mindset for the worst. Exactly. This is why we're not greedy. Look at the positions we've got on. Look at the lot sizing. Well, for my account, this is tiny, but look at the lot sizing. Look at the percentages. We're not greedy. We're interested in being right, not greedy. 100% agree. My broker, Awanda, recently said, due to some regulations in the US, pound-yen pairs or legit just pound-yen is limited even further. It's now 1 to 20 instead of 1 to 50, maybe because of its popularity. I don't know. That's weird. Normally, you don't have different leverages on different instruments. You have different leverages on different markets. Weird that they would regulate just one a little bit more than the others. But yeah, I mean, a lot of people trade pound yen. A lot of people trade pound yen. But it's just the same as anything else. I don't know why the popularity is with the pound yen. Why not the euro yen? Look at it. It's virtually the same thing. Why not do that? ADR on this is 118. ADR on this is 146. Not buying it. I don't get it. What's so good about the pound yen? Just an instrument. Make money with everything that moves up and down. I'm with Active Trades London, leverage 1 to 200. Active Trades. Most transparent broker award. Give it a rest. 73% lose money with them. For institutions. Doesn't say much about leverage anywhere. They do have multiple account types. See, this is where the regulation's going to get you. They're going to can those, and you're going to need that. So you need that. You need to have a qualification. Again, all of a sudden, the courses will fly in, giving you that qualification. Spread betting, that's the other option. That's gambling. It's classed as gambling in the UK. All profits from that activity are not taxable. Unless it becomes your main income, then it becomes taxable. So if you've got a job that earns you 40k a year and you earn 39k spread betting, you don't pay tax on any of that. If you earn 41k, you pay tax on all of it when you do that. There's always ways and means. So if you're going to do that, best thing to do is set up a company. There's all sorts of ways around things, but I've heard of these guys. Do white label as well, look. I'll have a look at them. Where does it say the spreads? Where's your search function? The leverage. There isn't a leverage. I need to contact them. Leverage. 1 to 50. Did you get 1 to 200? .com accounts are offered maximum of 1 to 400. .eu, yeah, so there you go. UK regulation is 1 to 30. I was going to say, you can't get that. So you are not with these. You're not with Active Trades London. You are with activetrades.com, which will be Seychelles, Singapore, Cyprus, somewhere. And the same as way as I'm with Axie and I'm with Robo Forex. I'm not regulated in the UK. I do not have negative balance protection from the UK regulators because I can't get the leverage. So yeah, a lot of brokers will give you an overseas account, but you have a black swan event that takes you negative 20k because your stop doesn't get honored. You owe them 20k. Be careful with that. People got stung big style when the Swiss cap was removed. Brokers were after people. Dot collectors on the door. You owe us 40 grand. No, I don't. You didn't honor my stop loss. Read the rules, mate. You owe us 40 grand. Careful. If you're position trading, it's not a problem because we're taking such small risk. If there's a black swan event, might end up owing them. I'm going to lose my entire account, but I might end up owing them a few grand. If you're going in with 1% risk per entry plus, be careful. Going to be scary and amazing at the same time. Yeah, I don't know what's going to happen with this GPT, but AI is going to take over the world. What if you get paid in crypto? If you get paid in crypto, they don't know about it, do they? At the moment, but they're looking at regulating crypto, so that will just disappear. Shroud, highly, I'm long on GU. What's your outlook? GU looks like a good long at the moment. That's come nicely off of support at the minute, nicely bouncing. It's not quite extended enough for me. It's extended on the hourly, just about to get an RSI alert on that in half an hour. So that's going to light up on the dash, but you've kind of missed the entry. So I'm looking for things that are getting an RSI extension and alerting while they're still on their way down. The reason I've been asked this a few times. It's a good actual explanation of it. People constantly messaging me saying, I'm looking at my RSI and it says 28.93 on the pound US dollar. Why doesn't yours say the same? Whoops, wrong one. Sorry, that one, 31.47. It's 28.99 because this works on candle close. What I want is not for the market to have got extended beyond the RSI like it is now and then pushed back off of it. I want it to be extended, closed down here, all the way down here. So we are properly getting in when this thing is stretched to hell. If it's going to do that and just touch the 25 level, I'm not going to be able to react fast enough to get into it. I'm looking for stuff that is stuck down there. We've gone hard. We've dropped. We can't seem to get any movement back. There's going to be propulsion gaps galore and reasons for this thing to do a profit take move. That won't be an entry because it's not extended. Candle close is not extended. If this drops down to there and then puts another bearish candle in, that will light up and we'll be getting in. But it's a good bounce where it is. If you took the 5-minute reversal alert on that, it's looking good. There's your entry. Up into there at least, I would say. It's the outlet Bahamas. Yeah, so you're regulated by the Bahamas. So go and look at the Bahamas. Go and look at your regulation. Go and look at your contract that you signed with them. If you may not have negative balance protection in there. Which is only, I mean, it's only really a problem if you're trading big money. Negative balance protection. Like I'm trading sort of a 35, 40 grand account. It's a problem. But it's not a massive problem, but it would be a problem. If I was trading a 100 grand account, I wouldn't want to be trading without a negative balance. Also, look in your contract. You will find an element in your contract that says that you have authorized them to execute your orders at any price they deem fit, which is why at swaps you will find you get an order execution up there and the candle is there. Because you've said in your contract, I want you to fill me at the price I asked for. But if you can't get the asking price that I've asked for, just fill me at whatever you can. Okay, hang on a minute. I'm long. You filled me up there. I'm suddenly in $350 a drawdown. What the hell's going on? Well, we couldn't fill you there. We filled you there. Well, I don't want that price. Well, tough. You signed a contract to say that we could. Go and read your contract. You'll be amazed what you've just given your broker authorization to do with your money. Nothing you can do, though. You need a broker. But don't ever believe they're your friends. The bigger they are, the dodgier they are. But you need to go with the big ones because the small ones are even dodgier. It's a money-making business. Their business is making money. Hey, look, the stream's gone on for an hour and a half. We haven't dropped out. How good's that? Trading with them for 10 years. Very fair broker, yeah. If they're established and they're good, that's brilliant. Yeah, stick with them. Good brokers are not hard to find. They're really not. There's a lot of them out there. Just pick the big ones and pick the big ones that will give you the leverage you want. If you're going to trade a stop loss based strategy or you're going to scalp, it doesn't matter. Just use a UK regulated broker because 1 to 30 or a US regulated broker, wherever you are, 1 to 30 is more than enough to scalp or to run swing trades where you're entering 3, 5, 6 positions at a time with a stop because you're going to get stopped out a lot of them, which is going to free your margin back up and you'll be able to get back into new trades. You're position trading and you need to manage multiple positions and survive a squeeze, you need the leverage. So you've got to have 1 to 100 plus. You can't get that in the UK, you have to go overseas. All the big brokers out there are, go back to the beginning of the stream, what I was talking about. They are gagging for your business. They lose 80% of their customers every month. 90% of traders lose 90% of their balance within 90 days. Some people say it's 60% of traders lose 60% of their balance within 60 days. On their way to being the 90%, 90%, 90%. That's what this industry does. So if you 90% of your customers lose 90% of their balance in 90 days, every 3 months you've got to replace that customer. That's why they're desperate for your business. And this is why they set up these offshore businesses at huge expense. Every time they need to go and get regulated in the Bahamas, it costs them $150,000. When they need to get regulated in Singapore, it's $250,000. The UK is over £250,000 to get regulation. They need to do it because if they want to if I say I need 100 to 1 leverage and they can't provide it, I can't be a customer. They make sure I can accommodate you, basically, is what they do. But they do it in a way that is, we can't give you that, I'm afraid. However, because the regulations say that we can't do this, there are other websites of ours you could have a look at, Mr. Customer. It's all very bendy. But if you like them and they work, stick with them. The only reason I ever change broker, because it's a pain in the arse, is if I have a problem with the broker. Like Robo at the moment, I seem to be getting quite a few disconnects. If it carries on, I will probably go, oi, I'll get a lot of disconnects. They may well say, well, switch from an ECN to a prime. I don't know, but I'll speak to them. And if I can't help, I will go. And then they'll phone me up and go, you took that 35 grand out. Where's it gone? Oh, you couldn't help me. Oh, please come back. Sorry, moved. And that's what I do. But I don't do it very often. Once every couple of years, maybe. But only if they hack me off, because it's a pain. You also got all the tax stuff to do, because you get a tax report from your broker every month and every year. It's just a pain when you have to go, well, this with this one, this with this one. My accountant does it anyway, but it's just a pain in the backside. Anyway, Tim, can't buy a loaf of bread with Bitcoin yet. I don't think you ever will be able to be honest. Anything going to your bank account can be scrutinized by HMRC. If you get regular Bitcoin income, they will investigate if you give them reason to do so. Yeah, exactly. Declare it. Just declare it. Set yourself up. An accountant, right? My accountant cost me £1,200 a year. Nothing. 100 quid a month. But I can phone him up at any time and go, this is what I'm doing. This is how I'm earning my money. What's the best way to strategically set myself up to pay as little tax legally as I possibly can? And he'll do it. And that's it. So you set yourself up with a company. You can set yourself up as an individual. Again, all of this is going to depend on how much money you earn and where your income comes from. And it's different for everybody. So just speak to an accountant. I have a company. I am also an individual. I have 3 income streams. I have myself set up so that I make enough money without having to pay massive amounts of tax. The business pays a certain amount of money, so therefore that goes in corporation tax. The corporation tax is paid to the taxman. There's a bulk of cash there which I can draw down as I retire, but that basically is something I can only draw 30 grand a year out of without having to pay hideous tax on. Just talk to an accountant. But until you start becoming a consistently profitable trader, i.e. you get a year where you actually make a profit, that's when you do it. Until you've got a year under your belt where you've made money and gone to the taxman and gone, oh my God, really? That's when you start talking to an accountant. If you suddenly start earning 5 or 10 grand a month trading though, do it now. Because the tax threshold in the UK is only about 9 or 11 grand or something. As soon as you're earning over 11 grand, you're suddenly liable for tax. So sort it. And there's a few brokers out there that will pay you in Bitcoin, but I think most of the regulation means they can't pay you in Bitcoin. Prop firms can, especially my Forex fund all goes through Deal. Deal can pay you as well. I don't have crypto. I don't use crypto. So I'm not looking to evade the tax man. That's the last thing I want knocking on my door. You ever fear a broker not letting you withdraw? No, never had a problem. I've heard horror stories on forums and things about people not being able to get the money out of brokers. When you look at the brokers, they're tiny little offshore brokers. So that's, again, don't use a tiny offshore broker. Do your research. Look at Forex website. Why am I using Forex? Oh, it's not there anymore. They had a big splash over here that they've been trading for. They've been going for X number of years. They're an award-winning broker. They've been established for 15 years, whatever. The horror stories you hear are usually people trying to withdraw money without proving who they are for money laundering purposes. Or they've used a tiny little broker, which is a rip-off. Don't use a tiny little broker, which is a rip-off. Look at how long a company's been established. Look at them. Look at their about us. About the company. Industry experience, 12 years. Fine, they've been going for 12 years. They're not ripping people off. You can't rip people off for very long without going bust. Look at Trustpilot reviews. You know, just do your due diligence. There's thousands of people out there that are willing to take your money as a broker. A handful of them are crooks. A lot of them are probably not very good companies. The majority of them are absolutely fine. There's enough choice for you not to have to worry about it. Anybody that's been established over 10 years in this industry ain't going anywhere unless there's a collapse. I was with Alpari, one of the biggest, they were at the time, Alpari were the biggest broker in the world. When the Swiss franc peg was removed, they went bust. Nobody in this industry is safe. Alpari went bust and took my money with them. I had to go through the courts to get it back. You never get, just don't worry about stuff. If you worry about stuff too much, you just worry all the time. Just get on with it. Anyone know a good accountant in the UK? There's loads of good accountants in the UK. Again, do your due diligence. Google. Check a trade. Any analysis for oil? I'll do oil and then I've got to go. I've got programming stuff to do and I've got to phone Virgin. Long. I reckon long at the moment. So worrying thing here is we didn't make a new high. So double top, don't know. If you look at it from a technical perspective, everybody's shorting it at the minute for good reason. The markets, the big market participants are calling it long. Goyle, Steve. I'm not doing Goyle. Someone needs to invent an instrument, Goyle. Gold crossed with oil. I wonder if you can chart that. Gold and oil cross. You must be able to chart it. Any cross you can chart. So yeah, like it, long oil. However, I liked it long in here. Didn't play ball. I liked it long from there. Didn't play ball. I don't know with oil. We got oil inventories this afternoon at 3:30. So regarding oil, see yesterday's video or Monday's video, as Tim has said. Yeah, exactly the same. It's not moved anywhere. Not gone anywhere. I've fallen out of love with it, basically. It doesn't move. So when it moves ridiculously fast and hard and you get stuck or you make a lot of money. When it doesn't move, you get frustrated and stuck in it. There's better things to trade. This is a commodity, therefore it is driven by supply demand. Supply demand for oil indicates it should be rising and it's not. I don't know enough about it. What about my bag of crud futures? Yep, you will receive a bag of crud. If you buy the crud futures, you will receive a bag of crud. I did get that joke yesterday. I'm not sure how many people in the Telegram group got that joke yesterday when you put that in the Telegram group. Somebody had asked about timeframes and what H4 and H1 meant. Why the hell didn't they just call it 1 hour and 4 hour? So we then started going on to all sorts of things about crud. And whereas it's got an E on the end, that way. You have to be there. Anywho. So H4 is just an abbreviation for the 4-hour chart. It just takes up less space in software. But it is the abbreviation used worldwide on all software packages and has been forever. So it was a bit of a silly question. Are there any settings for prop funded accounts with market reversal alerts EA? No. Same strategies. If you're going to position trade, you're going to blow them at some point. You will blow your account at some point. It doesn't matter what you do in prop, you will blow your account at some point. Just banked a bit more there, 1.04 now. That was New Zealand dollar Swiss just banked. So that was the H1 RSI extension mean reversion from Friday. Propulsion. Yeah, you're going to blow your account at some point, regardless of how you trade. So prop is set up. Think of it like a casino prop. It's the same thing. The casino has an edge. At a roulette table, it's 0. When the 0 lands, everybody loses money. Yeah, that's when they make the bank. In blackjack, the edge is there built in. In craps, it's built in. Everything is built into an edge in a casino. The edge on a prop firm is the 5% drawdown daily. There is no strategy out there, whether it uses a stop loss or doesn't use a stop loss, that will not have a losing run that makes a 5% loss. And if it doesn't hit that one, it will at some point hit the 10% max account loss. So there is no setting that works better with the market reversal alerts EA for prop. When you get in, look at this account at the moment. That's done 7.5% in 2 weeks, sitting in 1.53% of drawdown. Whether that passes prop or not, I don't know. I'll find out. It's either going to bank 2.5% or it's going to hit 5%. I have no control over whether it does that or not. The strategy works, but the strategy won't stay within prop levels unless you reduce the drawdown. So if you go and do a back test with the market reversal alerts EA that's taking all these trades and banking very, very nicely, you see it goes into drawdown on everything. It always goes into drawdown. That's what your account is there for. Drawdown is unrealized profit. That's the way you have to look at drawdown. So you can limit the percentage you go into drawdown by limiting the risk, i.e. the lot size on your account. Yeah. So that is literally it. If you want to pass prop, you can use less risk. So if you do a back test in the strategy tester on 10 pairs, right, and using a 0.25% risk, and you back test for a year with H1M5, if you see the drawdown exceeding 2% or 3% or something, yeah, you can reduce it to 0.1%. That will immediately halve those figures. Roughly. Yeah. So that is literally all you can do. What's happened in the past, though, doesn't mean it's going to happen in the future. If you'd have back tested before March 2022 on virtually all instruments for a year, you would have got a completely different result in March 2022 because the Ukraine war kicked off and everything went mental. Those strategies didn't work. What's going to happen next month? Possibly the US is going to default on its interest payments. What's going to happen? No idea. So all you can do is run a strategy that has the lowest possible drawdown to start with. And if you're not happy with it, reduce the risk on it. It's going to take longer to pass if you reduce the risk. So instead of using 75-25 on the hourly chart for H1 M5 mean reversion, use 80. Okay. So the only trades you would have had on this pair would have been there, 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 and there. If you'd have used the 75, you'd have had a trade there, 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 there as well, which would have increased your drawdown probably. But what's going to happen next on this pair? I have no idea. So that's all you can do. This is the reason I've got the prop firm comparison up here. If you want to really pass prop properly and trade properly with position trading, you need a firm that allows you to do it over a long period of time. That 250k account I've got running on Fidelcrest over here at the moment has banked $18,900 in 2 weeks. A lot of people maybe in here live on that a year. I've just banked it in a week. If I reduce my risk by 70%, I'm still earning a hell of a lot of money out of that account. However, it's going to be something I'm going to look at over a period of a year, dragging maybe 100 grand out of, or 50 grand out of, 50 grand a year is a lot of money, but I can do that using 0.05% risk per entry. I've got to pass the evaluation though. So you have to look at evaluations in a different way. Look at your evaluation as it's going to take me 3 to 5 months to pass it, maybe. When I get it, I can carry on doing it at that level. Or you can up your risk and pass your evaluation in 2 to 4 weeks, get the account and then drop it down and say, I'm going to earn the same amount of money I earned in the last 2 to 4 weeks over the next 3 to 5 months because that pays my mortgage. There is no EA or strategy out there that will pass an evaluation in a few weeks and maintain that level of trading, because you can't. If you can pass an evaluation and produce an 8% return in 2 to 3 weeks, right, you're going to at some point get burned. It's going to go beyond 5% drawdown. Because if you've produced 8% in 2 weeks, ask the question, why aren't the banks doing that? Not sustainable. Sustainable trading is somewhere between 2 to 3% a week. That's what you should be looking at returning sustainably with a nice amount of drawdown. And even then, your drawdown might go big. Hedge funds, pension funds go into up to 40% drawdown on their accounts while they're position trading. That's what they do. It's normal. But they don't return 5% a week. They return their investors somewhere between 10 to 20% a year. That's what the prop firms are set up to be able to extract from. So if you can get £250,000 worth of funding or dollars worth of funding with a prop firm, you can easily draw £5 grand a month out of it with virtually no risk whatsoever by going into no drawdown. Look at the trades here. Look. My mortgage is £1,400 a month. Paid it yesterday. I've just booked a holiday, which cost me £7 grand. Paid for that on Friday. Car payment. Don't know, stick it in the bank. Yeah. I don't need to earn that much money. I'd be happy to pay the mortgage and the car payment over a period of 3 weeks. And if I've got another 2 to 3K I can bank for excess income for this month, I'm happy as Larry. What do I need to earn? 5 to 7K. This is not something I'm going to sustain if this gets through. I'm going to drop the risk ridiculously because I'm sitting in 1.47 there. I've got 3.5% to play with. If this thing goes wrong today, this account's going to blow. I'm over leveraged. Yeah. You have to over leverage to be able to pass prop quickly, which is why I say, why not take 3 to 5 evaluations, over leverage them all with different strategies, take trades and start them at different times. One of them will get through. If you get $250,000 through, you're set. Get $250,000 through, you couldn't fail but to make money. If you made $300 to $500 a day, which is 0.11%, yeah, 0.1% profit on a trade. 1.16 in this case is $250. If you can make that a day, would you be happy? What do most people make in a job a day? 100 quid, 200 quid, maybe if they're in a big job. There's one trade sitting there that's done that today. Yeah. Totally under leveraged. That's how you make money. Everybody else says risk 1% with a stop loss of 20 pips. Why do you think everybody's losing? Quick look at the DAX. It's stuck up there. I'm short. I reckon we're coming down. I don't think this is going any higher. I think we're stuck. Poor old DAX. 10.50, we've got Bailey talking in an hour. He might shake it up a little bit. If he shakes up the pound, he'll probably shake up the euro, but doesn't look like it wants to get any higher, does it? It's really, really struggling to knock on that door. It's also struggling to get out of these lows. So for me at the moment, I'm just going to keep playing the range until the range goes. When the range goes, fine, we're off. But if the range goes off to the upside, fine. But I'm just going to play this range until the market tells me not to play the range anymore. I think that's all you can really do with the DAX. Short it. Red Euro news in 1 minute. There's no news today, Red, on the Euro. There might be on financial juice. Yeah, I mean, this is just the CPIs for the Eurozone. But we know all of these. We know these. These are an amalgamation of the French and the German. We know them already. They've already been released. So although this is red, this forecast is highly likely to be accurate because we know what they are. But it might move it. 2 minutes, 3 minutes. We'll hang on and we'll see what happens. It might move it. It does, you know. The market moves on news. Whether the news or not is relevant doesn't matter. The market just moves because it needs a reason to move. When there's news, it'll move. My time right now is M48H10. Is that the time frame you're trading? H10 M48. That sounds pretty good. I might have a look at that. Have you done a lot of back testing on it? Hussein, my question was for funded accounts, not for passing a challenge. There are not profit targets for funded. Oh, right, yeah. So if you've got a funded account, yeah, drop the risk. Drop the risk. There's two ways of playing prop. I do and have done for a long time both. One is to scalp the crap out of it, be aggressive, take 5, 10, 15 evaluations a month. Get some over the line, spend 3 to 5 grand doing it. As long as you get a couple of those funded accounts up to 3 to 5K plus, you're a profitable trader. Yeah. If you spend 5 grand on evaluations, get 3 of them over the line, those 3 funded accounts, you lose 2, that one you make 10 grand on, you've made 5 grand. That's one way to play prop. Second way, over leverage as a position trader, get the account, drop your leverage. I mean, drop it to a level that it's insignificant. If you got squeezed 4 ADR on the US dollar, you're going to 1.5% of drawdown on it. Yeah. So get the evaluation passed using position trading like I'm doing on Feudal Crest. And once I get that account, which is going to do 25 grand in 3 weeks, if I pass, that's not sustainable. I'm going to hit 5% daily drawdown limit. Drop the risk by 75% so that only generates me 5 grand a month. Oh crap, I'm only earning 5 grand a month with no risk. That's the other way to do it. There's 2 ways to do it, but you've got to over leverage, I believe, doing evaluation. If you're not going to, you are going to have to look at passing evaluation in months, not weeks. And if you're going to do that, there's very few accounts that you can use. To a certain extent, Feudal Crest now, because they've got the 60-day and E8, these are possible. So I've got 60 days to do this. CTI have always been 365. Fivers have always had a 365, and Surge now have a 365 as well. So these are your long-term burners. These are the proper ones. CTI were the one I originally joined up with because I know Daniel Martin, the CEO, and it does very, very well. And basically, his thing was teach traders how to trade and make them trade long-term. Force them to use a stop loss. Force them to use low leverage. Force them to make money consistently, not E8, go long, bang. News has just come out. Uh, 0.6 on a 0.7 and 7 on a 7. So yeah, I mean those are the options. You know, pick what suits you. What do you think of using H4M15 as a savings retirement type deal? Set it up and only withdraw yearly. Yeah, can do that. Keep your risk low. Whatever you do in trading as a position trader is highly likely to outstrip any pension fund you can ever put money into. I have a fund in an account. This is with Darwin X. I've got an account still with Darwin X. It's got my pension fund in it. And my pension fund trades the S&P. And the S&P is traded on the H4 RSI extension longs. That's it. That's all it does. At the moment, it's turned off. I haven't traded it for a good year now because the market conditions are bare. It only works in a bull market. When there's a bull market, I do exactly the same as Warren Buffett. I buy the dips and I wait for the S&P to return me a high return, and it returns me more than a pension fund. So absolutely use that strategy. That's partly how this got born. Yeah. If you keep passing proper valuations, then keep blowing your funded account, having taken a bit of income over the course of a few weeks, will the firms ban you from taking their further attempts? No. Their business model isn't to fund traders. Their business model is to get evaluations. My Forex funds business model is they make $20 million a month in evaluation fees. They pay out 11 to 15 million in funded trader withdrawals. They net 5 million, which they fly into marketing portion of it. So on a good month, they'll make 9. On a bad month, they'll make 5 million. That is the business model. The revenue stream is that. That is used to pay funded traders. No trader that gets a funded account with my Forex funds is actually trading real money. Read your contract. You are trading a demo. Your funded account contract tells you you are trading a demo account. They reserve the right to copy trade that. 85% of funded traders lose their account within a week. Yeah, they get the funded account within a week or two, it's gone. They never get their first payout, right? The rest of them, can't remember the exact statistics. We're looking at sub 1% make it through to their third payout. What does that tell you? Yeah. 99+% of funded traders never make it to their third payout. These are the accounts that they copy. So when you get funded, month 1, demo, they're watching you. They know that 85% of you won't make it to the payout. So they don't need to worry about you. They're getting 20 million a month coming in. If you do make it to the payout and you're one of the 15%, happy days, have what you like. I don't care. I got 20 million. Some of you will make it through to month 2. Not many, but some of you will. We'll use that 20 million to pay you too. You get through to 3 months, you know what you're doing. We'll start to copy your trades from your demo account. That's the funded prop model. That is how they operate, all of them. They may say, Surge Trader, we're the only firm that fund you with real money. So does my Forex funds, but they're up front and tell you how they do it. They don't fund you with real money on day one. No one does. It's ridiculous. I can pass an EA evaluation in a day, and I have done. £250,000. I've made $25,000 in a day. Do you think I was a good trader? Do you think it was a stable statistical edge I used? I was just lucky. I hit short, it tanked, I got a load of cash. Would you, as a proper organization funding traders, give me £250,000 of real cash to trade with after I'd just gambled for a day and passed an evaluation test? No way. Doesn't happen. So they couldn't give a monkey's how you operate your accounts. And I do it with my Forex funds. I withdraw regularly. It's with Deal. I've got a contract with them, for God's sake. It says in my contract they will pay me. It says in my contract all the rules I have to go by. It doesn't say they're ever funding me with real money. It says they're going to pay me. It doesn't say how, and I don't care how. They don't care how. What they care about is 20 million comes in, 11 million goes out, 9 million goes to the shareholders. Happy days. I'm happy, they're happy. That's it. That's the business model. That's your relationship. Your relationship with your broker is I deposit 30 grand with my broker. My broker, every time I press the button, makes money with spread and commission. My broker wants me to press the button as many times as I can because every time I do, they make some money out of me. If I deposit a small amount of money, my broker goes, excellent, there's 1,000. Got 800 coming in this month, boys. All right, brilliant. Oh, hang on a minute. He's turned that 1,000 into 2,000. All right, just don't take the other side anymore. Just take his commissions and spreads. Okay, that's their business model. They're happy, I'm happy. It's a symbiotic relationship with a prop firm and a broker. You don't need to know any more about the workings of it. What you need to know is that you get paid. That's it. And that's why I say use the big boys. Use these guys. These guys have been paying me and other traders, you, everybody, for years. And they will continue to do that as long as they get 20 million coming in and 11 million going out. They're not going anywhere. The small firms, however, haven't got 20 million coming out and have got a massive advertising bill. That's why small prop firms come and go. You get funded with a small prop firm and you're lucky enough to go up to 10K and they haven't got enough money to pay you, they vanish. Read the contract. It's all in there. They're protected. You signed a legal agreement. Do you ever read the 74-page contract you get given by a company when you joined them? Phones, internet, prop firms, brokers. Have you got any idea what you're signing? Read the small print. It's all in there. At any point, they don't have to pay you if they don't deem it fit. If they deem that your style of trading is not right, your strategy is not provable, they won't pay you. There's clause after clause. And that's why it's a case of, right, if I spend 5 grand and I get 5 grand back, brilliant. Your business model is spend 5K, trade a funded account to 5K, take it out. You are net zero. You cannot lose. The next load of trading you do, if it makes 5K, you might get paid on it. 99% of the time you will if you use a big boy like these guys. If you don't get paid on it, you've got your money back. Everything's gambling in trading, isn't it, really? Think about it. We're gambling. We're gambling on the outcome of a candlestick going up or down. It's just structured in a way to look like a business. There you go. Home truth day today, isn't it? Do you let your EA do 90% of the trading? Yeah. So on my Forex funds and EA, where I'm allowed to use them. So if you go onto here, look, onto the EA's allowed. No. Feed or crest. I'm not allowed to use EAs. So I manually trade. So I'm doing exactly what I've always done all my life. I'm using the dashboards. When I get an alert off of the ADR dash or off the RSI dash, I go over to Feed or crest and place the trade. My Forex funds, it's all fully automated. This lot. Yeah, just all that lot. Basically, it's the EA running everything. Within reason. I'm obviously keeping a very close eye on it because, and I'm doing aggressive drawdown control. Dax is just starting to roll, look. That is actually filled, that gap. So this propulsion gap isn't there. So watch that level there. But these lows, or one of them, I reckon. Who knows? Right, I'm going to leave it there. It's 10 past 10. We did get that news, obviously, and nothing happened off of it. It's not real. This is why you use these guys for news. This is the market moving news, if you like. Anything that's red on here is important, but it's not. If it's not on Forex Factory or the other big ones like investing.com, who is basically the same stuff, it's not going to be usually a market mover. It will be a little bit of a mover, if you like, or it will start something. It will start a price action movement, not a spike. It will just start the ball rolling in a direction. That's what it's for. So, okay, back tomorrow morning, 7:50, same time. Back tomorrow afternoon at 2:20 as usual. I'm going to phone Virgin now. Connections held today, which is good. So I will be back this afternoon. Obviously, for New York session, we'll trade the Dow and the NASDAQ and see where we've gone today. There's a few more RSIs just lit up on the dash. So go and have a look at those. So there's a few more opportunities possibly to look at on there. And we'll see how we've got on for the day, for the morning. So have a good one. If you need anything, I'll be in the Telegram group as usual. But back tomorrow, same time, 7:50, and I'll be back this afternoon at 2:20 for New York. So have a good one, and I will see you guys then.